If you ask your friends, neighbors, or your relatives regarding stock market investing, most of them will discourage you and mention that it is another form of gambling. Many individuals still believe there is no logic behind the stock price movement. Those who earn big from the stock market are just lucky. On the contrary, the interesting fact is that almost all billionaires in the world have created their fortune through the stock market, either directly or indirectly. Directly refers to the direct stock investing and indirectly refers to listing their companies on the stock market. One of the world's richest persons, Warren Buffett, created his fortune from direct stock investing, while other known billionaires like Bill Gates made his fortune by listing his company Microsoft on the stock market. Even in India, you will find many billionaire investors like Rakesh Jhunjhunwala who created their entire wealth from direct stock investing. Now the question is, if stock investing is another form of gambling, then how have these billionaires created their fortune from the stock market? Luck can favor once, twice, or even thrice, but these billionaires are consistently earning from the stock market over several decades. A gambler can't make millions consistently, so there must be some different story. On the contrary to this, 80% of retail investors lose their hard-earned money on the stock market. So what is that secret that these billionaire investors know but the retail investors don't? This is what I am going to share with you today from the book How to Avoid Loss and Earn Consistently in the Stock Market by Prashanjit Paul. In the very beginning of the book, the author has shared the story of 80% retail investors in the stock market through an example story. The story goes something like this. A few months back, Rohit didn't have any idea about the stock market but was eager to invest, because his friend Mohit was a stockbroker who used to trade regularly. Very often Mohit used to tell him, "Hey bro, today I made 10,000 rupees from the stock market." So Rohit got interested and approached Mohit. Without delaying further, Mohit opened a trading and a demat account for him. After that, Rohit handed over an initial amount of rupees 1 lakh to Mohit to trade on his behalf. That was the best available option as he didn't have much knowledge about what and how to buy and sell. Initially, everything was running smoothly. Almost every day his broker cum friend Mohit used to share some news-based tips and asked for his permission to trade on that stock. Then at the end of the day, Rohit used to receive a phone call regarding the earnings. After some initial gain, Rohit handed an additional 50,000 to his friend cum broker Mohit for trading. It was a nice start. He had already earned a 20% profit without any technical know-how. All of a sudden, the situation changed. There was no trade confirmation over 15 to 20 days. His broker Mohit no longer used to call him. Rohit was worried. Suddenly he got to know that 50% of his initial amount was wiped away. Rohit was shocked. For a first-time investor, 50% loss on his invested amount is too hard to accept. He came to know that due to corona pandemic, the market crashed badly and it won't change soon. With deep frustration, Rohit instructed his broker cum friend Mohit to sell his entire holding. While closing the trading account, he figured out that including brokerage and other charges, 55% of his invested amount was wiped away. You may wonder where Rohit was wrong. In the stock market, blindly following your broker cum friend may cost you badly. Have you noticed whether you gain or lose, your broker always remain in profit? You have to pay brokerage for every transaction, whether it is buying or selling. Your broker can earn only if you trade. So it's obvious that your broker will encourage you to buy and sell frequently. All of us are concerned to maximize our income. While you are concerned to earn from the stock market, similarly, your broker is also concerned about maximizing his income. Due to this simple fact, maximum broker encourages frequent trading. Exactly here the problem arises. The more you trade, the chances of suffering loss will widen, and at the same time, your broker's income will keep increasing. Big brokerage houses often send stock tips via SMS and email to their clients to encourage trading. Sub-brokers like Mohit can also lose their license if they fail to meet the minimum trading volume. It is the small retail investors like me and you who are affected the most in this entire process. You might have noticed that brokers are always ready to reduce brokerage if you trade frequently in large volumes. This is an indirect encouragement to trade more so that at the end of the day, they can gain irrespective of your position. Sadly, 80% of the retail investors fall into this trap and lose their hard-earned money on the stock market. Incurring huge amount of loss, they finally decide to exit the stock market, and after that, for the rest of their life, they stay out from the stock market and also advise others to do the same, as they perceive it nothing but just another form of gambling. Now you may wonder, then what is the solution? What is the secret that the billionaire stock investors follow? The solution is so simple that people don't want to believe it. Here it goes. Forget about intraday, short-term trading, futures and options. Remember, there is no shortcut to earning quickly. Every quick money making tricks are eventually money losing tricks. The secret is, as the author quoted, investing in high quality stocks and holding them for the correct period is the only way to create wealth. Now you may wonder one of these obvious questions. Number 1, what do you mean by high quality stocks and how to select them? Number 2, what is the correct holding period? Number 3, when to buy and when to sell a stock? Number 4, how to construct my portfolio to avoid loss and maximize profit? All of these questions are covered in this book in a detailed manner with very easy to understand simple language. So if you are someone just like me or Rohit who is interested to make money on the stock market, then I will highly recommend you to read this book, How to Avoid Loss and Earn Consistently in the Stock Market by Prashanjit Paul. There are multiple insights in easy to understand language in this book that anyone can learn. Like number 1, figuring out the fundamental strength of any company looking at just two ratios like return on equity and debt to equity ratio, and also quick formula to separate out quality stocks from the rest. Number 2, how to evaluate management quality from the comfort of home without visiting the company. Number 3, portfolio building guidance with when to buy and when to sell a stock for profit maximization. Number 4, how a 10 rupee stock can be expensive compared to a 1000 rupees stock. And number 5, many more insights from the rich experience of author about common mistakes that most investors do and how one can avoid it. Thus, there are clear reasons why the book remains Amazon India bestseller since the last 5 years in the respective category with thousands of positive reviews. Maximum readers mentioned about its easy to understand language, which makes a must read for all beginners in the stock market. Many experienced investors also shared that they learned many new insights from the book that helped in their investment journey. You will find the link given below in this video's description to check all the details and best buying option with the fastest delivery of the book. Thanks for watching. More wisdom, more solution, better life.